All right, well, the world is watching to see if this week will be better financially than last week. And here to join us with insight is our financial expert, Steve Budin. Good morning.
Good morning. How are you?
Good. I mean, it has been rocky out there. I mean, up, down, and then mostly down, right?
Yeah, it's been the worst first 2 weeks in index history, so that's not a good measuring stick. Yeah, it's been a tough couple of weeks.
Wow. All right, so let's take a look at the Dow. Not too bad.
And you know what? Well, the market actually opened up about 250 points. So it's taken a drop since the market opened, which is a little bit of an ominous sign. But, you know, the markets go up, the markets go down. We kind of warned about this a few months ago that it was getting a little bit ahead of itself, but nothing at this point that I would be overly concerned about. But we'll know a little bit more as the earnings season starts. We'll talk about that in a second.
And I think a lot of people, and I was going to say, a lot of people wonder, like, well, should I be doing something?
Right.
But should we?
At this point, depending on what you're doing, if you're like contributing to a 401k like you mentioned, it's not necessarily the worst thing to maybe take a little bit off the table, but if you're buying in, the market from top to bottom from last summer is down about 12%, so kind of a little bit of a discount. Depends on what your nerves could handle. I mean, this is normal. Markets go up, markets go down, but if you're okay when the markets go up, but you're skittish when the markets go down, like somebody I might know, then you just make sure you can handle it.
I know. So Steve is my financial guy. So I'm like, hey, how is my IRA
We'll talk
doing?
about that later.
We'll talk about that later. Okay, let's talk about China and Iran. How are they having an effect on everything?
And China really was the engine of growth for the last couple of years. And we're seeing more and more data come out that's showing that China is still growing, but not as much as the global markets would like, and you're seeing a little bit of a pullback. I think a lot of it does come from that. And also, the Chinese have been accused of fudging the numbers a little bit, and I think this is just more evidence. Markets like certainty, and when you see the Chinese government massaging the numbers, it doesn't necessarily make you feel comfortable. And I bring up Iran because the sanctions have been lifted as of last Friday. So now you're going to see the Iranians enter the world economy again, pumping oil to the tune of about 500,000 to 1 million barrels a day, which is good for folks like us who drive, but it's really going to drive oil prices down. And you're seeing oil now below $30 a barrel. It's as bad as it's been since 2003. So that has a big disruptive effect on the economy. It's great to have the prices go down, but when it's this quickly, it can be pretty disruptive. Texas, North Dakota, states like that are really suffering.
Right, and you forget, because I filled my tank up for like $30 the other day. I was like, this is nice.
Yeah.
But
the hope is that as you fill that tank, you have extra money to spend other places. And we haven't seen that data pop out yet, that the folks that are saving money in the gas tank are putting it other places. And I think one of the places, unfortunately, it's going is health insurance. And we'll talk about this next week. The health insurance premiums really are beginning to go up.
They are.
So I'm not so sure you're going to see that gas savings effect that the experts are hoping.
All right, let's talk about earnings season. What's the deal there?
This is where we'll see how the markets react. More and more companies during the next couple of weeks will release their earnings, and earnings at the end of the day are really what drive the stock market. Now, earnings are usually compared to prior earnings, and more companies are giving weak guidance, saying that we're not really expecting so much of earnings this time as we did last year, and that low bar is really what concerns me, because a company could come out and say, hey, we beat our earnings from last year, but if it's so low, you're really not achieving much. So as these companies come out, and more importantly, they give guidance as to where they see the economy, that'll really say whether the market will go up or down. But definitely a tough start to the year.
Yeah, it is. So we just hold tight.
Hold tight.
All right, whatever you say, Steve.
For now.
Interesting. All right, good tips. Thanks so much, Steve.